You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, January 30, 2017. Let's look at what's going on in these markets and then talk about the things that moved the markets over this last week and what may be moving them in the coming week. We have at the end of the day on Friday, S&P 500 down 0.16%. And when we look at our weekly chart, we see that it crossed over going up back on the 25th of, as we tune in, the 25th of November. And we have continued to see we saw the S&P 500 move up until sometime around the week ending the 16th of December, and then it's really slid sideways since then. Now, of course, the Dow over the course of the last week did hit new highs, but when we start looking at what's actually going on in the S&P 500, we can see on our weekly chart, we continue to move up, and it has sort of reversed the sideways slide here over the last week, moving up some over the course of the week, but it still hasn't moved above. It has not settled above the high that it hit back on the 16th of December. So we'll continue to see how the total, and remember the S&P 500 are 500 big stocks, big volume. It's much, much bigger than the Dow. It's 500 stocks versus the Dow's a couple of dozen. And what we see going on here is we see the derivative oscillator on the weekly chart losing steam. We did say over the course of the last week, the PPO, the price percent oscillator, has ticked back up. So it's moving up again, not simply sideways as it had been in the past week. That is the week ending on the 20th. And we'll continue to monitor things. Now let's check out what's actually going on the two-day chart. Still, my friends, has not crossed over going up. So it has not given us an entry point. Why has it not? Because we have the weekly chart moving up, the two-day chart actually moving down. It has not had enough energy to cross over. Derivative oscillator did cross over on the two-day chart back on the 2 days ending the 25th of January, but on those 2 days, again, ending the 27th of January, ticked up. Derivative oscillator increased energy, but still hasn't pushed through. So we are above the weekly trend line, but we just don't have a 2-day trend line yet because we don't have a crossover going up. We crossed over going down back on the 30th of December. So waiting for enough energy to pull that over. And of course, when we look at our 2-hour chart, you can see how it performed at the end of the week. We saw basically a down day on Friday, crossing over, going down at 2 in the afternoon on that 2-hour chart. So that's where we are on the S&P 500. Nothing to trade there, but the news gets better and better with the trade that we are currently in. Those of you who joined us even recently. Now, I did have questions. Tom, when are we going to get into a trade? It's already getting late in January and we've not found anything to trade yet. Remember our rules. First thing, lose no money. Second thing, make money. But if you lose money, you got to make a hell of a lot more money just to catch up. So we do act cautiously as we do our virtual trades because even in our virtual trading accounts, we keep up. We keep score with the money we make or lose virtually. And remember, we're not a stock calling service. We're an education firm. We want you to train with us. And then when you get good enough, you develop your own sense of timing, your own rules for trading and investing. Then you can make up your own mind. Nobody pays us to give you advice, and we do not give you advice. We simply want you to learn to train with us. And then once you get good, you can do it on your own. So where are we on the Qs? Well, the Qs crossed over going up on the 2-day chart back on the 9th, sometime around then of December. And we saw the weekly chart cross over for the week ending the 6th of January. And then lo and behold, what did we see happen sometime around, if we go to and we're at the weekly chart, which of course is in a confirmed up move. We go to our 2-hour chart. We can, of course, see that our 2-hour chart crossed over going up at 2 p.m. on the afternoon of Tuesday, the 24th. What have we seen happen? Well, we saw the market shoot up. Our entry point, according to my calculations, was 124.10. That was 2 in the afternoon on January the 24th. The market closed, well, the market throughout the course of the day on Friday, the high that it reached was 125.92, so almost up to 126. From 124 to 126, that is a nice climb over the course of just 1, 2, 3, 4 days. Not a bad climb at all. Now, of course, what we've been experimenting on are using our weekly vertical crossovers. And of course, if you jumped in there on Monday after the weekly crossover occurred, that was at 121.30. And of course, you're not just up $2 there, you're up almost $4, so $5. So we're very happy to continue to monitor these things and see what's going on. Now, the word of caution, as you look at this 2-hour chart, as we talked about on the Friday podcast, what we have going on is it is sideways sliding and looks like it's getting very close at the end of the day on Friday to crossing over going down. So do be careful. You don't want to lose what you have gained. And again, we've got different ways to get out. We don't like stop outs because the minute you hit your stop point, you get a market sell. And in a dropping market, you can lose everything you've gained. So again, be cautious if you are going to sell part or all of your position. Now, again, remember what we typically like to do is once we get into a position, we don't necessarily use that 2-hour chart to help us decide to stay in. Many times we'll go back to the 2-day chart or even to the weekly chart if you got in on a weekly trade. And of course, the 2-day chart on QQQ continues to rocket upwards. We've got a nice upward moving PPO. So continue to watch and monitor, but we are excited about the excellent movement that we have seen in the Qs so far, but don't let that be taken from you. Again, it's always great to get a profit, even if it continues to move up. You can say, look at what I could have made. Hey, focus on what you did make. All right, let's keep moving through these charts. What do we have going on TLT? That, of course, is the 20-year bond. It was on Friday, and again, we're looking at our weekly chart at this point. It tried its best to cross over. In fact, the charts were up on Friday, 0.36% for 20-year bonds, but what we have on the weekly chart is a spinning top, red closed box spinning top, which means more of a downward pressure. Still lots of indecision there. Didn't have enough energy to cross over on the weekly chart going up, so we do not have a confirmed bottom on bonds. We were hoping to see that. 2-day chart is still up, although the derivative oscillator is losing energy, and we see the PPO, the price percent oscillator, sliding sideways as we've had 4 2-day candles going down. We're not down to where we started moving up, but we're not all that far from it. So we're not calling anything on bonds at this time. We don't have a trade there. Those using your daily market worksheets, of course, do continue to mark bonds on the weekly chart as it's still not a confirmed crossover. You can draw your arrow sideways, but still confirmed down move. We don't have a crossover going up. We do have something exciting on the next chart. What do we see on gold? Boom. Gold has confirmed its crossover going up on the weekly chart. I don't like the candle necessarily on the weekly chart, which is a hammer, which again, indecision, not decidedly down movement, but not strong up movement. It's not a solid red box. It's an open red box. A big upward wick, a small down wick. Again, you know, it would be great to see the green candles that we've seen the prior 3 weeks. We don't have that, but we do have a nice growing derivative oscillator, and we do have the MACD, or the PPO rather, the price percent oscillator, moving up on the weekly chart. We do like what we see there. If we look on our 2-day chart, we see that it shows over the last 2 days down movement. Even with that down movement, we do have a nice gain on the weekly chart. So it is losing, and just the 2-day, and remember the 2-day is the smaller wave. We've seen it sliding sideways over the last few days. That's why we don't have a solid green candle. We have less That is on the weekly chart with all those 2-day side movements. That's why we see that indecision. So we'll continue to monitor, see what's going on. We've broken through that 2-day trend line, but we don't have a crossover going down. We have a sideways slide. So we'll continue to watch. And as we look at our 2-hour chart, we see that at the end of the day, well, not even the end of the day, around noon on Friday, it tried to start recovering itself. Hasn't crossed over going up yet, but that might happen. Now, if you want to practice what we've started really pioneering here over the last few weeks, as we have looked at trying to figure out how best to utilize the information from the vertical crossovers on our weekly chart, I want you to look at 10:30 after Idiot Hour on Monday for a jumping in point on this up move on the weekly chart on gold. It may be a short-lived up move, as it was when it crossed over on the 24th of July, but even then, the beautiful thing was if you bought in at the worst point, which was the high of 126.82, before gold crossed over going back down, it hit a high of 131.15. Let's cover that again. Just listen. High of 126.82 on a buy-in, and you could have cashed out at a high of 131.15. So again, that's $4. Not bad, my friends. Not bad at all on an ETF that was selling at $126 at your worst buy-in point. So again, that's what we're trying to find. And again, big money comes with big charts. The weekly chart is the biggest chart that we look at. So pay attention to that. Experiment with us. Give us your feedback as you practice these things. Okay, just to recap, for those of you with your daily market worksheets, mark your daily market worksheet on the S&P 500 on the weekly chart, still going up. The Qs, still going up. TLT, still going down. Gold has reversed and is going up. All right, let's talk about what moved the market over the last week and what might be moving it over the coming week. First, global equities advanced. Of course, all that was led by U.S. shares, with the 3 most watched U.S. indices, the Dow Industrial Average, the NASDAQ, and the S&P 500. What did we see happen? Well, they all set records during the week. And the 10-year note rose 2.5% from 2.42%. If we look at what happened with the U.S. economy, we see that the economy in the U.S. slowed over the fourth quarter after major surging in soybean exports in the third quarter. U.S. growth slackened to an annualized 1.9% in the fourth quarter from a 3.5 reading in the third quarter. And what was a bright spot? Well, as we released that information, we saw the third straight month of improved capital expenditures. And of course, what has our new president done? Well, he has gotten down to business. He has actually approved the long-stalled during the Obama administration Keystone XL and Dakota Access pipelines. And folks, all economies run on energy, and inexpensive energy is like a tax break. It's like pumping cash into businesses, and that bodes very, very well for where things may go in the future. Now remember, just because business is improving doesn't mean that the stock market necessarily improves. That's why we got to follow the charts. You don't pay attention to what you hear in the news, my friends. You pay attention to what you're seeing in the stock charts. And of course, we also see that Trump is talking about a replacement for the Supreme Court, that is for Justice Scalia. That's going to be happening soon. Foreign trade, we're going to see all sorts of things going on with the president threatening a 20% tax on Mexican imports. Again, getting rid of NAFTA. We're just going to continue to watch as things happen. They all appear to be pro-business, pro-economy. And of course, as we touched on earlier, the Dow Jones Industrial Average popped above 20,000 for the first time in 120 plus years. on Wednesday. Again, very interesting to watch. What do we see happening in Britain? Well, the Supreme Court over there has ruled that the Parliament has to vote to initiate the triggering of Article 50, which will then allow the UK to start its actions to get out of the European Union. We'll see how that happens and how that works. Of course, President met today with the Prime Minister, and a lot of really positive things were said, and we shall continue to see how our good friends in Great Britain get out of the stranglehold of the European Union. What's happening with the Japanese? Well, a weakening yen and a strong U.S. economy and, well, strong U.S. sales in cars helped boost the trade balance to a surplus. This is the first time that's happened for Japan in 6 years. They posted a $60 billion surplus with the U.S., 40% of which was derived from what? Well, the sales of auto parts and autos. And its global surplus was $36 billion. And of course, that helped the weaker yen in late 2016. So we'll continue to watch how the Japanese make it in the world. They're, of course, good friends, and we want to continue to see how they do in the globalized world. Let's continue to look through what all happened. I guess lastly, what we'll do is we'll touch on Canada. It is said that it's going to set its own course with NAFTA. Regardless of what the U.S. does, they'll continue to push ahead on their own. I'm just thinking the big dog on the block, the U.S., is going to control what really comes down. Let's talk about what's going to happen over the course of this next week. Well, China's markets are going to be closed for the Lunar New Year on Monday and Tuesday of the coming week. On Monday, the U.S. is going to report its core personal consumption expenditures. That's going to be put out. On Tuesday, the Bank of Japan is going to hold its rate-setting meeting. We're going to see on Wednesday manufacturing purchasers. Manufacturing purchasing managers indices are going to be released that day. And then on Thursday, the Bank of England is going to hold its rate-setting meeting. And on Friday, two things are going to happen. The U.S. is going to release its January employment report, and service sector PMIs, purchasing managers indexes, are going to be released globally. So what does this mean? There is no Fed meeting, but any of the news, such as U.S. employment in particular, U.S. core personal consumption expenditures on Monday, anything that is shocking to the system, shockingly good or bad, could have some impact, okay? Particularly if the market's weighing heavily on one thing or there's lots of exuberance. If it's more exuberance injected by some great report, then that could help it or hurt it. But again, if the numbers are pretty much what's expected and the market's really not, excited about any of it, not going to have any big impact. It's the things like the Fed meetings and things that shake up the system that are really going to impact. But just sort of be aware, on Monday, we're going to see the personal consumption expenditure price index going to be put out. Anything super good or bad there. And you might also pay attention to what goes on Friday with both the PMIs globally and the employment report for January. Just sort of keep an eye on that. Folks, that's where we are as we come to the end of the week, as we have a new week starting. We hope you're as excited as we are about these charts, about this great initial trade that we've had for the start of the year in the Qs, which is the NASDAQ 100. It is always great to be with you. We love to hear from you. If you appreciate what we do, please go to our website, sign up for, and get every day the information that we post on our video podcasts. If you want to help us out, go to our YouTube channel, subscribe, and of course go to iTunes, subscribe to Charting Wealth, and give us a 5-star rating. You guys have made us as high in the world as number 6 in the world for stock market podcasts, and we so appreciate that. If you've not already signed up for our newsletter and you do so, guess what you get with that? You get our How to Read a Stock Chart video, which will get you started to understanding what it is we do here. You'll also get the layout that we use at freestockcharts.com. And in addition to all that, you will get the daily market worksheet, which is your turbocharger for learning how to read these charts and improving drastically. You fill this out every day as you listen to the 10-minute podcast. We know it's a little longer with a comprehensive weekly review, but every day, 4 days a week. This is the 5th day of the week. When we do this, it starts our Monday off, ends our week. But you fill out that daily market worksheet, and it will supercharge, putting pen to paper, your thoughts, you're listening to us, you're going through the charts. It will supercharge your training, and you will become a charting master so much quicker. Thank you so much, folks. God bless. Let us hear from you. If you have questions, problems, concerns, chartingwealth.com.